if you were asked to fix something, and you know that after you fix it, shortly, a few months after that, you will be responsible to maintain it because the person who owns it would not be there all the time.
Dr. Axel, what's the number one way or number one secret, or the first secret to building your portfolio with cash flowing, producing 1 to 4 units throughout the United States?
Well, the number one thing, and it's very close to the number two thing, is performance. Is really becoming clear in your thinking, or if you have somebody to help you as a mentor or as a coach, really become clear, how do you define performance for yourself? So in our case, we basically use as an initial anchor for performance the 1% rule, meaning like you look at a property, how much do they want to sell it to you for, and you take 1%, and that should be your monthly rent. So if I look at any properties here in our area, they're anywhere between about $650,000 to $1 million. That means even if I get the lowest end $650,000 property, I would have to get $6,500 a month in rent to meet that performance. And that is pretty much impossible to find. And that's why we said we need to find a place or places out of state where that is possible. So performance, I would still say, is probably number one, closely followed by the selection of the turnkey provider.
Okay, so make sure we gather that for the listeners. So performance, close number one. You define performance, or how do you define performance for yourself? So make sure you have a clear vision for what winning is, right? Let's define what's going to score the bucket and what's not going to score the bucket, right? What's going to get the base hit, the double, the triple, the home run. Right. And one way to applicably apply that is using what's called the 1% rule, which states if I can buy something, let's say for $650,000, I would like to have at least $6,500 of rent, right? 1% of that on a per monthly basis. Is that a fair summary?
Yeah, that's perfect.
Excellent. And then you said the second one was?
The second one is the selection of the turnkey provider. And I have to go a little bit broader so people understand. So turnkey investing basically means you find a company who finds what I call the ugly duckling in a nice neighborhood, the kind of like the worst house there, buys it, puts all the renovations, new electrical, new plumbing, kitchen, bathrooms, everything new. So the company renovates it and then puts a price on it that is at or just slightly below appraisal. Now, if they do this as the good ones do, 10, 12 properties a month, they have a pretty good idea and they know the area very well on what is a fair price that the property after renovation would appraise. So that's on the one hand, the price that you would buy it for, but also importantly, it needs to appraise so that you can actually put financing on it. But here comes the real important component and why I say it's a close number two to performance. And that is that exact same company that found the property, renovated the property, sells it to you after it appraised at the sales price or slightly below. They also need to be the ones who manage it for you. And that is because there is a very important dynamic. And you can ask yourself, any of your listeners and viewers can ask themselves, if you were asked to fix something, and you know that after you fix it, shortly, a few months after that, you will be responsible to maintain it because the person who owns it would not be there all the time. Then you fix it in a way that you have as little work as possible with maintaining it versus fixing it and selling it and never seeing it again. So picking turnkey providers who are actually doing all these steps, finding, renovating, putting a fair price on it and manage it, that's the number two top priority.
Wow, Dr. Axel, you put that so well. And I'm going to make sure I encapsulate this because, I grew up in the Bay Area with my dad part of my life, and we'd build these, custom homes, room additions, and construct them, right? And he'd always say, don't move bricks twice, right? And make sure that whatever we're doing in a way that's going to get top dollar too. But you're even taking another step forward. And if we had to still manage those properties afterwards, that we're going to have a higher level of care and responsibility to make sure that we're not having to fix it again. Is that a fair summary?
Yeah, absolutely.